Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area for this market. From here, in fact, multiple rejections to the upside have been created. The market respected this level as support in multiple occasions, and at the moment it is testing the exact same level of support and demand once again. And from a pattern standpoint, it has also created a clear impulse followed by a correction. Now, in general, after an impulse, if you want to measure the correction, what you're supposed to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice is that we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly at this area. Now, what this creates here is confluence of support. And when we have a confluence of support area, that increases the probabilities from here of getting a potential rejection to the upside away from this level. So the monthly time frame at the moment looks quite bullish because, as we were saying, inside of a confluence of support, you have an increased probability of getting institutional longing. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis, so what the big players in the market are doing. For now, let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, the situation is quite clear. We have a market which is testing and rejecting previous weekly resistance from which this move to the downside was created, which has now turned support here. Now, as the market is testing previous resistance turn support and rejecting it to the upside, more bullish price action could be expected for the market to go and test this level here, which is previous weekly support currently turned resistance. So the weekly time frame at the moment does seem quite bullish. Now, let's drop down on the daily time frame and see what we have. Now, from a daily standpoint, I did speak about USDCHF just a few days ago when the market was here and explained all the reasons for which we could expect a rejection to the upside and the completion of this M pattern in the neckline, which is in fact exactly what the market is currently doing. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But now that the market has given us that move, where we could be looking for the next structure to be created. Now, in a situation like this, before we dig deeper into what we have from a technical perspective, first, we have to go and see what is going on if we look at the commitment of traders, so what hedge funds and the big players in the market are doing precisely on the CHF. Now, if we look at the data for the CHF, it is important to keep in mind that we are already looking at CHF USD because all currencies on the spot are traded against the USD. But since we want information on USD CHF, we simply have to reverse everything that we read here. So what we can see is that since institutions with the last reports have massively decreased their net positioning on the CHF, going from minus 3.4K to minus 42.8K, this shows how a huge amount of longing is going on from an institutional perspective on USDCHF, because institutions, by decreasing their net positions on the CHF, so by shorting the CHF, they have to actually long USDCHF because, as I said, every currency on the spot is traded against USD. So institutions have been aggressively longing USDCHF, therefore making it stronger. So let's keep that in mind and move back to the chart. And by the way, If you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also in the description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, in a situation like this, it is important to keep in mind that this level is the important structure that if this market wants to continue higher, it needs to break. In fact, this zone was already acting as previous support all across this area. Then the market broke it to the downside, and this previous support was turned resistance here. And now, until the market will remain below this resistance, it can easily be rejected to the downside. So in order for the market to continue higher, it needs to manage to break above this resistance. Only if it will break above this resistance, at that point, things would get very interesting because this previous resistance at that point would once again be turned support. And after the break on the retest of the previous resistance turned support, that is where there is good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.